Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good catch, Will. You come back. Usually you guys let me go on for like 5 minutes before somebody's like, hey, there's no volume. Well, guys, seems like it's like the first day since, I want to say, Federal Reserve meeting, but let's go back to the charts and look. But the first time that like I come here to the treasuries and they're actually up overnight. So let's pop in here. I think these headphones are going, like, before it was like when I were broke, it was the right ear cup that was kind of didn't work, and now the left ear cup is kind of being weird. Okay, so oh no, I am so wrong. Okay, so here's the well, let's go to the overnight. Okay, so it is up. Like, we are getting an up move here, but they sold pretty hard yesterday, and they did move a little bit down overnight. So it's maybe a little bit too early to try and call it like a trend change. But we did get a pretty good extension below this. Where was it that we were looking at? I want to say it was like 22-ish, right? And then when we come over here to a daily chart, you can see that we just careened through that 200-day moving average. So it's not uncommon to like come through those levels, and that just as an example here. Okay, this is kind of on the other side of it, but here's a situation where, you know, we came up through that 200-day moving average and then slipped back down and then came back through it and then came back to it and then we came back to it. Like, they like to mess with these levels. Okay, so don't be fooled. Don't think that it's going to be like, oh, it's just going to be gush. No, that's probably going to be like maybe let's just say today is down, and then, you know, they could come back through it and then down. You know, if we were getting, if the longer trend was down, who knows? I do kind of wonder if there is a limit to how far down this can go, though, because if it's Donald Trump that's primarily pushing the markets right now, I still think that the Federal Reserve is going to reduce interest rates. I think that they have to, otherwise the economy is going to crash. And as long as we're not getting numbers that are inflationary, I think that the Treasury should be okay. So, but let's see how it goes. There's the S&P 500 still kind of struggling over here. Like, look at this. That's up, down, back down. Just like any rally is starting to get sold off. So some different action in the S&P 500. Now here's oil. Oil kind of rearing its head this morning, but I would say still kind of within this lower range here around 70. Gold and silver look amazing, though. It sold off a little bit yesterday, and it's continuing up, and silver actually even extending a little bit. I should go check my stock portfolio. My stock portfolio probably looks really good right now. Copper Copper's down there. Japanese yen. Ooh, okay. Japanese yen a little bit, they got hammered. It was really, that move yesterday, really driven strongly by the dollar. You can see there. That move in the dollar. Right there. Let me highlight it for you. The dollar really moved yesterday. And the Bitcoin, okay, well, Bitcoin gave up some of its gains, but, they're still above 6,500, so it's not too bad. This, again, seems to be that the markets think that Donald Trump will be a pro-crypto president, and so they're buying it. Which is probably true, although I think the mistake that the crypto community is likely to make there is to think that it's a bigger deal than it really is. Like, Donald Trump is saying, well, if we have a bunch of cryptocurrency that we've seized from somebody or something like that, we shouldn't sell it. Maybe that's a good idea. But I think that there's still some big problems for like wider adoption of Bitcoin. So I don't, could they get to 100,000? I guess I could see 100,000, but some people are like, oh, we're right on the precipice of hyper Bitcoinization. It's never going to happen. Hyper Bitcoinization is never going to happen. Anyways, so we are getting a little bit of uptrend in the treasuries here, huh? Although they kind of come back. Well, the opening range is pretty tight, and the activity on the DOM is pretty low as well. So I'm not so sure that the treasury market is going to be all that interesting today. It's kind of giving me those early signs that it's going to be pretty quiet. Okay, well, said I should check my stock portfolio. Let's do that.
Block buy.
Hey man, you're here early. You're here on time today. Good job. Okay, as soon as I'm like, maybe the treasuries aren't going to do anything interesting today, we got a 3K block buy at 16.5. Yeah. Ooh, wow. Okay, so it ticked back. I want in on that. That was maybe tipping us off there. Oh yeah. Yeah, I'm now up 256% on my Goldman shares. And I'm actually okay on my rare earth element shares too. And silver's still down, but only down 50% as opposed to like 70% I was before, so I think we're okay. The religious cult leader will be on the... What are you talking about? Are you talking about Donald Trump? Because, like, he's on the, quote, podium every day. Okay, well, I don't like that, Phil. Well, let's try and run with it. EDB. No, what is that? Oh wait, ECB. Oh, why are you calling Lagarde a cult leader? Wait, is that today then? No, I don't have that. Had some Canadian numbers there, by the way. Oh, we do have, okay. I see. They're having some sort of a conference, huh? Let's see if we can get more information on this. Well, Laguard's not speaking until much later today due to participate in a panel discussion titled The Future of Cross-Border Payments. Wait, what? Faster, safer together, the safe and inclusive fast payments across border at the annual meeting of International Monetary. I don't know if that's actually a huge deal, TLA. So, I think I'm gonna give it a little bit. But it's looking like that trade was a failure. Or take drawdown on a bond is used. Not really. Vortex is about average, actually. Or let's not say average. The Vortex is the average move in ZN. So it's entirely possible to get Vortex adverse excursion on a trade, but that does kind of mean that you probably could have gotten a better entry at the very least, right? But we saw like after the 3K traded there, we ended up seeing 9,000 trade there overall, and then we started to see them hit into the 17 as well, and so that kind of made it look extremely bullish to me, and then it did the post meta order pullback. So I did get stuck, but I'm okay with the way that it's looking right here, actually. So I think I'm gonna do something super risky. We're just trading on our sim account still, so do it like that. Yeah. You know what else? Something that's kind of funny with my account. Oh, I don't think I can pull it over. There's too many things I'd have to censor here for you. But I bought Berkshire Hathaway, and for the longest time, it was like not really performing. But my total gain loss on it is 50%. I don't know how that is, but yeah. And I still have a little bit of I still have about 20% of the account in cash. It's not bad. So, but wait, what does that? I don't think that that's necessarily, I don't know if that performance is the greatest though. Let's see here. How does it compare? Okay, total returns for the year. I actually am down a little bit because my portfolio is up 35.95 but the S&P 500 is up 40%. If I had the full portfolio, if I didn't have the cash, then I would probably be tracking. Two more ticks down. Not looking for too good for this, does it? That'll probably make me puke, and then... So when you get big orders like that, you know, there can be problems with that. It can make it get stuck. It can be just like a temporary thing, and then if it goes away, they come back really quickly like they've done right now. I really thought that it was so aggressive that it was likely that we were going to see more come, right? I guess I was too confident on that one. Because I would be okay with taking the loss, but this is a bigger loss than it should have been. I heard a click there, but I didn't see 14.5. Okay, there's about 2,000 contracts at 14.5 that were a spoof. Oh, that's interesting. That's a weird spoof. Why would you put it on the bid there and then pull it right when it would be about to get traded? That is really weird. I don't know if I've ever seen that. That's not something that I see often. Well, I wouldn't pay too much. So, like, there can be key levels. I don't know if I would say that, like, like, a key level would be, like, 200-day moving average. That's pretty important. And maybe the opening price and things like that. But, yeah, even then, I wouldn't base my entire analysis based off of a quote-unquote key level. Because... at the end of the day, what it really comes down to is, are people buying or selling, right? Are the future orders going to be buys or sells? And most of those orders have nothing to do with what the price is or whether we're above or below a certain price or anything like that, right? So, this looks like a bust, so I am going to... bail on this before it turns into a stop run. We'll see if it immediately bounces back up. I'll try it again. So what I'm getting right now is not I'm not getting signs of like a large order coming in, strong trend, yada yada yada. It's still kind of in the market maker games sort of a thing. But I don't want to deal with the they go for the lows scenario. Let's wait. See if they do that or not. I think the thing that I want to see here is like, okay, maybe there's a stop run. And we'll see if that's just the market maker letting it fall down. Or if we actually get more volume to it and it starts to become a downtrend. But I also want to see maybe those buyers come back. Maybe once you know that selling starts getting there, then those aggressive buyers come back, because they sure sputtered out quickly, right? That last two upticks don't seem like much. Anything important, at least. Browsing around on Reddit, and one of the top posts on Reddit right now is, if Americans could boycott McDonald's after Trump's French fry stunt, that would be great. That's a surefire indicator that publicity stunt worked really well. That you're like, let's boycott McDonald's now because of it. Down tick. For some reason, I keep feeling like like warmth on the back of my leg. Like, what is that? Makes me think that, like, I don't know what would make that, but it's weird. Makes me think that there's something on me, like something spilled on me or something, and then there's nothing there. Is that weird? Is that like, you know, or I go to ChatGPT and it's gonna tell me that, like, I have cancer or something like that, right? Are they gonna? It still just looks like market maker, kind of just letting it move around here. In other words, I don't know if you can say that this activity is anything more than random. Let's see if my hypothesis works. Blood clot symptom? Oh, I don't know. That's weird. Okay, I did get in there. Okay. Do you understand how the science of this works? It's like, if I have a distribution, okay, and it's a normal distribution, right? Something like 80% of the data points are going to be here, okay? Markets are more like this, where this one data point is bigger and all this. So in order to get a good statistical result on something, you have to get enough of these data points to see what the actual distribution looks like. And that's, those are less common. So that might be like 1% of the samples, or less than that, right? So you're going to need thousands, tens of thousands, millions of data samples to get enough of these ones to get a statistically significant result, right? So if you were to come into the market and say like, oh, 06 is like a critical level or something like that, and then it seems like it does something, maybe this price holds, maybe we go above it and it's off to the races, who knows? But you can't just look at it once and say, okay, so now that's a thing, there's an edge, I interpreted it correctly. No, that's just like a random chance that you're going to be right on that. It's really not worth even worrying about unless we have like a really sound statistical study doing this thing over tens of thousands of trades and 5, 10, sometimes 50 years. If we don't have really solid empirical evidence to back an idea up, we really just shouldn't waste our time with it. It's a distraction that's going to prevent you from building a good intuition. Gabby, I think it's I think I missed a comment here. Hold on, maybe I don't have things. Maybe it's because I only have top chat instead of live chat. No, I don't have your other. I think you missed a comment. Maybe I'm just misreading your comment. Let me read it again. I think it's better for reading to change configuration and keep close the red and blue columns. No. You need those limit orders there, right? You want to see what was there, and then how much pulls, how much stacks, how much trades, etc. And you'll notice that there's kind of a pace of it. Like right now, there's 1770 on the offer right now. That's like a relatively safe amount. 2,000, that's a relatively safe amount. If they get below 1,000 and definitely below 500, that's the point where the as she goes trades will come in and they will try and hit into it to catch the edge. Right? So I can't really tell that without seeing the depth of market. Like, it doesn't matter necessarily if there's a 5K order up there at 19. It might matter if I can find some sort of, price level that might explain why there's extra liquidity there. Okay. But even then, like, the existence of it doesn't necessarily tell me that we're going to move up. But I want to remember that it was there, so that if we get up to 19 and it trades through with only 200 contracts, then like that tells me something about the state of the market, right? So I really think that you do need those market depth columns on there, right? The market depth does matter. It's just, it's not the number that's sitting there resting all day that matters. It's how those change that matters. Okay. But you're not using, so like, really not. Discipline and risk management and self-awareness is the holy. It's really not. First of all, there is no such thing as a holy grail in trading. It's the wrong analogy. It's the wrong analogy. Obsidian, good morning. Oh yeah, you're here relatively early today. I'm so when I look at the 10-year, it's kind of this may still just be market maker games. But when I look at the 30-year, oh, they're buying the 30-year. Well, okay, they just ticked up 2 ticks there. So maybe we're okay. Although I'm wondering here, how come... For some reason the position window not showing up. There we go. Was that really negative 453? How did I do that? 2 more contracts, maybe? I don't know. It's weird. Going back now to Uzi saying that feeling like that heat in the back of your leg is a blood clot symptom. I just can't imagine that I would have blood clots, though. Nah, that one doesn't make sense. It may just be because I'm wearing pants, and I've usually been wearing shorts, but it's getting colder. Maybe it's just that. I'm also thinking about how bailing on my earlier position really wasn't the right choice, was it? You know what, Amen? To be honest, I just... What do you guys think I should do here? I just don't... Freaking... I should just not say anything. I should just not say anything. Did you trade UB? Do you think that usually UB is leading the move of the bonds, as some traders have said? So not exactly. You know, some people do say that like UB will lead, but like usually that's not the case. Usually if we're moving up, you're gonna see the 5-year leading, and if we're moving down, we're gonna see the 5-year lead. Like it's kind of a weird thing, because these bonds over here are kind of like more sensitive to like breaking news and things like that, but then ZB and UB are kind of like move more because of the amount of duration that they have. And generally speaking, like if all of these tick up, like they're gonna do it at the same time. Like it's pretty rare to have like one of them move up multiple ticks and then the other ones follow it later. Like the correlations between them is like almost instant. And yeah, like some people, if we're getting like a bull flattener, then it's like a different thing. But like generally speaking, if we're flattening, it's going to be a bear flattener, and if we're steepening, it's going to be a bull steepener, generally speaking. So, which is to say, like when I look at my DOM, it's going to be like this. The 5 years are going to lead if we're moving up, and if we're going down, it's going to be like this. Most of the time, right? So I think that when people say that, like they are picking up on something, but like saying that it like leads is probably not the right way to describe it. Okay. The other thing is I'm not really convinced that you're gonna see something in UB that you're not seeing in ZB. Okay. But the advantage of UB is you've got a really huge tick to commission ratio, and it moves a lot. So that works both ways, right? Like if you're in a winning trade, you make a lot. If you're in a losing trade, you lose a lot. So that's the thing with UB. Now, yesterday's, I have an email to answer that somebody sent. Somebody asked, well, you know, they were doing they were doing a funded trader program with bonds, and that the funded trader program just canceled all of the bonds, right? So I was thinking about it because they're saying like, what would you suggest instead? Well, there's nothing that really moves like the bonds. Probably the next closest thing is probably corn, but really nothing moves like the bonds. But it kind of made me think, like, you know, the tricks that people were playing to, you know, mess with the queue and everything will work on any instrument. It's not just on a thick market instrument. Any instrument that you put an order in and it doesn't get filled it moves really far away from it and then comes back and fills it, will exhibit that behavior. So you could frankly do it on equity indexes. This is just kind of a little bit less of a factor because equity indexes are so random. So should people go and start doing it on gold and corn and yada yada until basically the only three instruments that you're allowed to do on funded trader programs are NASDAQ, S&P 500, and oil? Was kind of thinking about that yesterday. It's because I said the truth. No, it's because you literally have absolutely no clue what's going on or what I'm doing and why I'm doing it. And then you come in and you say all of these things like you're an expert when you're clearly just a 16-year-old kid that's new at this. I don't put the stop down, one, because I don't want people to know where I'm planning on stopping out, and two, because this is actually degenerate risk taking. Sometimes if it goes strongly against me, I'll add even more. I mean, I have a pretty good feel and I get an idea for how far it's going to go, but I'm using the leverage to amp the profits up, right? You're gonna take half off 7. What price did you get, Octavius? There is some iceberging there at 17.5. But there's also some pretty strong buying there, so... $15.5? Oh, okay. That's interesting then that you think 17.5 is a good spot. I mean, there is iceberging, so it does look like a potential, like, you know, liquidity hole or something of that nature. The thing that drives me crazy is the retail traders that are so confident about things that they have literally zero evidence for. I don't understand. I had this with other people too, where it's like they'd be super anti-religious. It's like, well, we have no proof. You can't prove it. It's just like a method of control, yada, yada, yada. And then they would just believe the most ridiculous trading ideas. Sometimes ideas that like we have evidence to explicitly disprove. Just drives me crazy. Like, if we don't have empirical evidence for it, it's probably really not worth sharing with people. I mean, breaking news and that sort of thing, that's useful. Did I tell you the other day, somebody said, oh, it's not always on the first Friday of the month. It's actually 3 weeks from the reference week for non-farms. I was like, oh, so that's why sometimes it's not on Friday. That was a good comment. That's something he was telling us, something that like, you know, you can go and look up and verify yourself, right? That's the sort of stuff that's worth sharing. And, you know, like your thoughts and opinions on the markets and, you know, just kind of like your feel, because we want to get an idea of like what sentiment is for the day, right? But like all this sort of stuff about like, I should be doing this and I should be doing that. If you don't have data to back it up, don't tell me. I don't care. I'm thinking about if I should move that. That's, you know, I took that just to kind of, because I think I was 6 on the other trade, but I don't know if I want to take it off at 19 or not. Okay, some reloading there at 18. Does go offer. That was a strong uptick. A little bit of iceberging. Ticks back up. Doesn't take long for them to stack at 18. And meanwhile, the other two are actually kind of leading the treasury. Okay. So it's going to take more than the 1500 to get through 18.5. Wonder if this ends up being a lot like yesterday's trade, but in the opposite direction, where like, you know, like those offers don't just get out of the way. Like it takes a decent amount of volume to trade through them, but they do trade it up. Because I think that buying on the mean reversion trade in here, I'm not saying that that's like a winning trade or anything like that, but there is going to be some institutions that are looking at that moving average in particular. So like the mean reversion trade coming in here, I could see that. I don't know if I really have any better explanation for the buying today. Probably would have gotten filled on my orders at 19 now, though. Wow, Malay announces dissolution of tax. Maybe that's what you guys were saying yesterday about what Malay was going to do next. Oh, that's an interesting video here. In the order flow in a order flow subreddit. I can't tell what platform he's using. Let's watch it on YouTube. Maybe that'll be a little bit bigger. It could be Jigsaw. How does he get so many comments on that video? That's curious. I just think it looks cool. Oh, that's interesting. It's Sierra Charts. I just thought the color scheme was cool. Does kind of look like an influencer. I wonder if they have like another platform that they're more popular on. Still a little irked that like I mean I did call the direction correct and everything. It's just my original entry was terrible, right? The original entry was terrible. It should have just waited for the whole swing against me, and then I would have gotten in. It would have been beautiful. But like I don't know if there was really anything to tell me that was going to happen. Sometimes it just works out that way. Pretty big icebergs on both sides at 18 and 18.5. So might be a while before we get another move. Well, they got through the 7K iceberg at 18.5, and there's a good solid bid on it too. Maybe they will tick through 19 here. And I'll probably need to recenter. Back down. Only 1268 too. Did you clear any interview? Not yet. Got some more interviews lined up. There was one company that dropped out. I don't know. I tell you what, this market is pretty brutal. I like I am getting responses and stuff. I'd say I'm doing a lot better than some of the other people that I've seen online talking and stuff. But it's like not the best companies usually. They're usually, I'm not saying that they're like bad companies or anything. They're just like companies that I haven't really heard of before and things like that. It's gonna take a while. There's a really good chance, honestly, there's a really good chance that I won't be able to find anything until next year. I hope it's not that bad. But is it saturated? Well, it's not. What happened was the big tech companies like overhired like crazy, right? And then dumped all of those people onto the market. And so what happens is when you're applying for a job, the people that you're competing with are people that have Google on their resume, right? which so you might actually be a better candidate, but they don't necessarily pick based on those things, right? There's a lot of randomness and biases in the hiring process because there's not really anything better to do. How much? Oh, it varies. Is it between 100,000 and 200,000? It's kind of hard to say because it's been changing, right? So it used to be that being up at over 100,000, you're doing pretty good, but apparently not anymore. Like, I'm surprised to see like basic DevOps jobs being priced in the 150,000 range, and it's like, okay. Because to me, DevOps is kind of like the simpler part. I guess not as many people have experience in it, so again, it's like... Market's not efficient, folks. Not by a long shot. Well, they've kind of been fiddling with 18.5 a bit. There's another iceberg there. Haven't been able to really get them to clear 19 yet. So like, I'd say there's definitely like a deep liquidity hole forming at 18.5. But it is just curious that like so much volume is traded there. You'll add if we get a pullback to 17. I'm kind of worried that if we came all the way back to 17, I mean, I guess it's well within the realm of possibility, right? But that would make me start to doubt the long side. I don't know. I'm definitely getting that low resting liquidity 18.5 now, though. Our DevOps team don't touch dev at all. They're just setting the work time fixing pipeline moving environment, and they put huge days duration on. I don't know. You'd probably be surprised all of the things that they're probably doing on their own that you don't know about. Oh, hey. That's a little better. Yeah. Okay. Now that was 19.5 kind of just jumped out of the way, right? Now we're getting it back to some of those key prices from yesterday. Oh, okay. 5K at 20. Well, these 2 extra contracts I got here, I'm okay taking them off of that. Agreed, joined. Baby. Is the stock market fundamentally irrational? Asks Can Bilgy Maz. Okay, that's a weird name. Dang it, that's not gonna fill me there, is it? I don't know, what I'm seeing should be a decent meta or long. I think I can just hold this. Okay, I don't even mean stock X with great fundamentals compared to stock Y, which sucks but has a bigger market cap. I mean, the fundamental concept of a stock market, I feel it was created to milk the unwary masses all those years ago, and the con is still working. Why do I say that? Simply because other than dividend payments, there is no tangible, innate benefit to owning stocks. All those earnings ratios, growth metrics, valuation metrics seem to be made-up concepts and an emergent property of the irrational human behavior. Buy stock in the stock market in the hopes that some other irrational human will buy them later at a higher price. I mean, both value stocks and speculative ones. There's no floor there. What creates the floor that we stand on is the desire of humans to own stocks. Well... I mean, there is earnings, there are dividends, but he's right that most of the value from stocks comes from other people being willing to buy stocks. Yeah, I mean, I'm not even sure in this case it's like he's not wrong. It's like, why do you care? Why are you saying that? Right? What's the relevance of it? That's the sort of thing that if you accept at face value, then they're going to turn around and they're going to say, like, maybe we should ban the stock market or something. Yeah, I don't know. I don't know what point, like, what's the larger point that they're trying to make. Oh, here you go. There is a tangible benefit to owning stock, the ownership of its assets. Sure, if you're a regular guy, you're not going to control anything. But if you're a billionaire, you can just buy the majority of a small company and then dictate how they're used. Want proof? Look at Twitter. So there was this other thread yesterday I wanted to read to you guys. Okay. On r/change my view by fakespear999. Change my view. All day traders and retail traders are gamblers deluding themselves. 100% of their results are based purely on random luck, and there is little to no skill expression at the retail level. Down 3 ticks. That sucks. It didn't give me much time. There was one chance for me to have gotten filled at 20 and I was too late. That's okay. Background. I am a professional oil and refined products trader. My experience includes 4 years on a commodities trading desk at a bulge bracket investment bank, and now 2 years trading refined products at a major oil company. In the next year or so, I will consider transitioning to derivatives trading at the same company, and eventually hope to lateral to a physical trading house or macro product shop down the line. My risk-taking strategy relies primarily on fundamental analysis, arbitrage of physical cargoes between Europe and the Americas, and occasionally in-house models that combine fundamental and technical factors. Okay, so this is somebody that works in the industry, in our side of the industry, the futures and commodities side of the industry. My view, I am firmly of the belief that all retail trading and day trading strategies are pseudo-scientific BS, and anyone claiming to subscribe to these principles is either trying to sell you a course or is massively misinformed. The simple fact of the matter is that a retail trader will never have the skills, infrastructure, or capital requirements to beat an institutional trader in the long or even medium term. Well, that's true, but you're probably setting the bar too high. right? Don't necessarily have to make more than the institutional investor to consider yourself a success as a retail trader, right? Yeah. Trading seat costs at even a medium-sized physical shop can reach $500,000 per year, head inclusive of the data subscriptions needed for even basic fundamental information. A single medium-range vessel from Europe to US contains 37,000 metric tons of gasoline, which is a notional value of around $25 million per ship. The average desk at a major easily trades one of these every week. Your retail PA with 10 to 50K under management is barely a rounding error compared to the institutional daily VARs, much less even thinking about trying to withstand a drawdown. As Jeremy Irons famously says in Margin Call, to survive in this business, you need to either be smarter, faster, or cheap. Smarter would be Rentec, Jane Street, etc., hiring statistics PhDs to design models using such esoteric math that the average trader bro can't even begin to fathom, or to obtain some sort of technological edge like literally a straighter cable to the exchange like the Flash Boys. And we know from LTCM's catastrophic blowup, even being smarter can still sometimes fail. No matter how hard you double-shoulder dead cat ladle, you'll never be able to beat these guys in their sleep. Faster would be similar to what I do. My market is relatively illiquid with a limited number of counterparties. As an oil major, we're able to act on physical cargo arbitrages in a way that would never be possible for a pure financial player, much less some rinky-dink Instagram Forex dude lying about their capital requirements to get approval for options on Robinhood. Day traders will never be able to obtain either of the edges I list above or any otherwise unmentioned edge. It's all just astrology for bros, and any positive returns gained in the short term are no more due to skill than winning at craps or baccarat in Vegas. And then he had an edit. I am by no means saying that nobody out there in the entire world is ever capable of beating a specific market. Like many of you have pointed out, maybe you have some specific industry expertise that allows you better insight into a specific corner of a tradable security. This strategy is not tenable in the long term because retail traders simply do not have the balance sheets and amount under management to withstand long periods of asset mispricing. Like, I disagree with this one, because if you're day trading, like, you don't care about asset mispricing necessarily, right? You're predicting the flows. Something could be mispriced for a long time. Your thesis may be 100% right, but markets can and eventually will stay irrational longer than you can remain solvent. In the long run, only people who are able to consistently make the right calls and have deep enough pockets to hold a position until their thesis realization every time are the institutions, not the retail traders. I think he's correct. Right? At least like what retail traders talk about and teach and so forth is nonsense. I try to talk about things that are proven, that are empirically proven. But, will you be able to turn that information into an actual edge? Remains to be seen. It's still going to be tough, right? Something I find really interesting about this, though, is that, something I've been trying to tell you guys, right? The way that the institutional trader is trading is completely different. And it's not really even practical to, even try to do what they're doing, because they have data and information that you're just never going to have access to, right? And speed. So like he's doing arbitrage, right? He doesn't. That's basically all he knows. He's not trading. The ones that would probably be the best suited to us, information to glean from them, would be like hedge funds trading momentum strategies, maybe, right? Or hedge funds reading order flows. But even that, then, if they told you edges, you probably wouldn't be competitive in those edges because you'd need to be fast, right? So I found that really interesting. Found that really interesting. It's also curious to me. That's the first time I've ever seen an institutional trader come out and talk like that. It's funny here because almost all of the comments are saying, yeah, you're probably right. Well, back above 18.5, so... Dude's biting the hand that feeds him? I don't know. So the weird thing is that, yeah, normally you work at an institution, you wouldn't be allowed to post anything like that. I guess maybe the rules are different at a commodities house. That's why I think that by and large you don't see a lot of posts from the retail folk. Like here's the thing that drives me crazy, right? Is if I go and I work for a large institution, whether it's a bank or a hedge fund or whatever the deal is, right? And I'm interested in the market. But I'm working in technology, right? My experience has been, and even when I've talked to other people and looked at other places, the people in the technology don't care about the market. They don't care what it is or what the edges are or any of that stuff. It's like, the strats do that stuff. We don't really care. And then even when you get to the people that are doing that for a living, they're not really actually passionate about it. Like, they just do the thing that firm has taught them to do, and that's it. And a lot of them don't really have that much of an interest in like expanding their knowledge of the market beyond what is necessary to do their specific job. It's crazy, right? Like I really think that you could take some retail traders and train them to be institutional traders, and you could probably have a lot of success with that. I kind of wonder if the right mix of retail traders would maybe beat your, Ivy League educated, whatever it is that they're hiring out there. But the problem is that the retail traders have been mistrained so badly that it's like almost not worth, trying. I wonder if they have SOPs they need to sign off on. Yeah, well, most financial firms have very strict policies on social media use. Like, you cannot come out and talk about the market. So talking about retail trading is maybe a fuzzy area. If I was working for Goldman and I made a Reddit thread about that, that would probably be, you'd get in trouble. Probably. And by and large, those people are not very active on social media in general. And basically the only place where you really see very much of that stuff is LinkedIn. That's why for us, the things that we're interested in, LinkedIn ends up being like one of the best places to go. So many people say like LinkedIn, they don't like it. But for us, that's like one of the best sources of information. Well, so far I'm still kind of on the like, well, did Octavius say 17.5 or 17? No, he said 17. I'm still kind of like, okay, if we get all the way to 17, it would really make me start to doubt the trade. But it would just be a VWAP bounce, right? So I don't know if you have to worry about it too much. But right now it's still kind of it's still just kind of in the hole. Hasn't done like a real pullback. Well, I mean, I guess the hole is kind of the pullback, but you get what I mean. Really wish that I'd gotten my fill at 20, because then I could probably be messing around with it here. Well, one thing is that after the move that we had, I don't think that if they get below 16 that... Okay, so now it is going to trade 17. We'll see how it goes. Well, there's big icebergs on both sides at 1717. Ooh, and stop run. Well, I don't really think that I had too much edge on this anyways, right? It went pretty good in my favor in the beginning. Now, you think that they'll go for the lows? I find this movement, though, that had to have been something else. Okay, so I am hearing something from Bank of England's grain that sounds somewhat hawkish. So maybe the selling was from him. Ain't nothing wrong with the trade you took, except yeah. I saw the icebergs at 20, and then I said, okay, probably is a good time for me to take it off, but I had come to that realization too late. And if I had taken the 2 contracts, you know, I'd be wishing that I had taken more off, right? So but there's this other side of it, which is like, okay, like, what actually was the reason that I got in? Well, I had seen pretty aggressive buying, and it kind of made sense to me that there would be people taking the mean reversion trade. Like, that was literally all that there was to it. I don't know how strong of an edge that would be. You know, part of me is kind of like, well, there's some intuition involved in there, and maybe you did a pretty good job. But, you know, Bank of England speaker, for instance, seems to be screwing that up, right? So I'm just acknowledging that, you know, this what I was doing here was primarily risk taking. So if it's primarily risk taking, then we kind of have to analyze it from within that lens, and from within that lens, we should have gotten more out of it. Like I should have been a bit more, a bit more diligent in figuring out where the best place to get out was and everything. Alert. That's why we all get quiet when we're, yeah, maybe, maybe that's why. $47.05. But I guess the other thing is that I'm kind of getting mixed signals here a little bit, right? Like, some of what I'm seeing kind of suggests that there's not that big of an edge available for grabs here. But then there actually, it was real activity. Like, the iceberging is insane. Well, I didn't like that down tick. And there's 16. Oh yeah, I am hearing about the Richmond Fed. -14 versus -17. I really think that the reason it's moving right now, though, is because of Fed speaker. I think that the Fed speaker kind of caused us to get smacked down from like 17.5 to 15.5-ish. I think that 4 ticks was green, because he was saying like we need to make sure that we're on top of inflation and all of these things. So, you know, Fed's Harker didn't say anything, but Bank of England's green is speaking. I think it was green. He was the one that was making kind of like hawkish comments that I was hearing on the news squawk at the same time that we sold. Does look like it's gonna go for that stop. Strong selling flow in GC. Well, so let's look at charts here a little bit, and let me show you what I'm seeing. Okay. So here's the ZN. We were getting a meta order, so that's all good. And it just like kind of fell apart all of a sudden, right? Now you see it in ZV. just kind of looks like a little blip, right? Like they're actually still buying it in CB. So that's kind of part of why I'm like hanging on for dear life here. It's again, this trade is primarily about degenerate risk taking more than anything. Okay. But you also did see the Japanese yen come up and drop, right? And gold is dropping. Oil is jumping pretty hard. I don't know what's with the oil. Maybe related to Middle East, because I did hear stuff about Israel and everything. But the S&P 500 isn't really moving. So I don't know what you make of that. Like that doesn't say it's going to move up, it's going to move down. It kind of suggests that you know, we're getting some randomness here and not necessarily any. Yeah. So I don't know who it was that just said that, but somebody said, "Oh, we haven't." One of those central bank speakers just said that we haven't defeated inflation yet. Amir says it's not about the Middle East. So why is gold jumping so hard? I do kind of think that they're gonna pressure us here. You think it's about inflation? So if it's about inflation, why would oil be jumping? I guess the interesting thing here is that we didn't get a piece of economic data. It was Fed speakers. And that causes oil to, hey, let's jump up. Well, okay. So not sure I'm picking up on where you're going, Amir. It's because, so like, if oil was jumping for some other reason, and then the treasuries really didn't like that, and the treasuries were selling, that would make sense, right? High oil prices precedes inflation, can cause inflation and everything else, right? But why would the treasuries getting hawkish cause demand in oil? Like I can see oil demand causing selling in the treasury, but I don't understand how selling in the treasury could create buying in oil. Okay, that's curious. This is like one tick up and all of a sudden all of the flows in the treasuries flip back around long. Okay, so it still takes a little bit to clear 16, so it's not that aggressive. I'd still say the way that flipped around was pretty quick. So I'm hearing 3. Are they all in like a... Are these guys all talking in the same forum or something? Nah, I didn't even have the event that they must be talking on my calendar here. But the news squawk just told me 3 guys talking, so... Or just mentioned comments from 3 different guys. I do kind of, for some reason, like the look of it there at 16 to 16.5 for a tick. Chances of a fill there now are getting not looking good. Okay. This is gonna go without me. That's okay. It does kind of look like it's going back to where it was before that quick move down. I really do think it was a central banker comment. Market overreacting, and then probably some stops because there was probably people, looking at the VWAP. Like it went below the VWAP and they bailed. Is that a strong... Okay, so... that one doesn't make any sense. So I just got a strong tick there, but it's saying that they bid at 14.5, and then I look at 14.5 and I don't see anything unusual there. Gold started long moves again. I mean, it's a little bit too early to call it, but right? I'm on the prayer hotline to get out at break even. Well, like this is a great example of this sort of situation. Is okay. So should I hang on to it or should I just scratch it now? I do kind of feel like that whatever flow it was that I was writing at the beginning, you know, has at the very least been interrupted. But something makes me think that we're still going to go up. I don't think I'm going to get 20, but see, I don't know. I don't know if there is a good answer to it. I mean, I don't think that you can really say unless you know the future, right? Because if we continue to move up, then the answer is, then it's good that you held it. And if we move down from here, then the answer is you should have scratched it, right? And I don't think that there's, I don't think that it might not be anything more than that. Okay. It was funny yesterday. People were asking me for availability, and I was like, well, it's pretty open. So and I wanted them to be fast, so I gave them like the availability for the whole week. And now all of a sudden, like everybody's filled up my calendar. So they just got an email message with somebody else looking for. Okay, 16.5. So they're going back and forth this area between 16 and 17 now. Yeah, this is where, yeah, maybe I shouldn't have canceled those orders that I had there. I don't think that there's been enough of a tick into 16 for that to have gotten filled, but you can see the way that 16.5 is trading it. That looks like it would have been a strong, the scalp there would have been really good. I would close the position if it even goes higher. Well. Oh, it filled. Okay. They're like, okay, sure, Seth, we'll give you fill. And now it's probably going to be like just careen down. Oh, it worked. So here's somebody else. Here's another Fed speaker saying rates will remain restrictive for as long as needed. Sorry, I shouldn't say a Fed speaker, but a central banker. Should move this over here. Take some notes on something real quick. What? Just while I'm watching it, for fun. For fun? Yeah. Hmm. Hmm. Back to the lower end of this. Doesn't look good. Doesn't look good. You scratched it, right, Octavius? You did touch your break even. I like to hold them. Wow, you caught some of that obsidian? Awesome. I was a pretty impressive move in oil. Like it really does not make much sense to me. I'm still trying to figure out what the headline was that spiked it. Because I don't think I've ever seen a situation before where a central banker caused the price of oil to spike $1. You know? They sure are sitting there at the bottom of it, but you think they're gonna go for it or not? It's always I tell you what, the frequency, this used to be not something that would happen very often. The frequency with which they'll come to like the lows and just kind of chill there and like not do anything, like there's nothing significant about it. It's always so weird to me. It's like one more tick and there, you know, it could be like all chaos and nobody cares. Okay. I wonder if I could do something like, I think I've had some trades, some strategies that were like, if we made a new low, then does it make more if you go for the breakout or not, or that sort of a thing, right? But maybe I should do it like if we're within 2 ticks of the low. So if we're within 2 ticks of the low, how often does that, you know, maybe we're within 2 ticks of the low, but we've also been within range for like 20 minutes or something like that, and try for a reversal or something and see what that yields. Because it seems like in ZN that does happen fairly frequently. It'd be something like I'd have a short time period and a long time period, and I would say if we're within 2 ticks of the low on the long time period, but the difference between the high and the low on the short time period is within a certain amount of ticks, then you take the trade. Well, you know, if it wasn't 8:30, I would maybe just start programming that. But we only got about 30 minutes left. Maybe tomorrow. Remind me tomorrow. So I saw this thread. How are you supposed to make it if you are born freakishly intelligent, but from a working class background? And I'm like, okay, that's kind of a weird title, but okay. But then I look at the subreddit. It's r/40k lore. Oh, okay. Whatever. Well, since this pull down, I'm still getting buying in the 10-year treasury. I do think that they're going to stop me out. So I should have scratched it, right? I don't feel like I took this trade too seriously. I probably should have taken it more seriously, but it does kind of hurt. It does kind of hurt. The ego here. Like, oh, well, it was going so good, and then it came down. It makes me feel so dumb. Well, that was a strong uptick. It was like immediately 3,000 contracts bid at 14.5. Curious. And then 1927 to take it offer. You went short at 15.5, really? Okay. Yeah. There was like a really strong uptick and they kind of dashed it. The downtick wasn't as strong, but they kind of canceled it out. I don't know. I like when I think about the bigger picture, like here's Yellen speaking. Well, like, was I really picking up on that strong of an order flow and all of that sort of stuff? And something kind of makes me think, actually, no. Like maybe the amount of favorable movement that I got was really luck. I think I'm going to try and hold it until the end of our session, but we'll see. Iceberging at the low. That's not a good sign. In this situation, it's a 50-50, but like the 50% of the time where it goes lower is ugly, so now honestly the reversal can be kind of ugly too, so evens in ZF. Oh. Yeah. I don't know, bigger pic. So like I see two things. One is it kind of settles down here in the low and just kind of dies down. Another one is we get a bit of a stop run, but that it still kind of settles in that area. Like if we were to get like serious downtrend, like that is to say like there's a stop run, but then it goes even lower than that, then like that's some pretty wild selling on the day. And I don't really know if we have, I don't think I could explain all of the other activity earlier in the day if we had that much of an imbalance on the sell side, right? I do see a scenario where they continue to buy. Like, this could just be like a sentiment change and kind of like people were positioning themselves long and they're stopping out and so forth now. But the big guys do still need to buy, and so maybe in the end it comes back up. So I could see that kind of pullback or like stop run and pullback sort of scenario. But that's all just speculating. I don't think that I have any really good reason to think that any one of those is more likely than the others. I am still seeing some pretty strong icebergs down here, and when you're getting iceberging like that, that can be really hard to read, right? So more broadly, I think that the sell-off probably is. Are we going to call it the French fry effect? Okay. I do think that, like, when I come to a chart and I look at the 10-year treasury, like, this was numbers. Okay, this was numbers. Some of this, I think, is Trump, yeah. Pretty good for just a mouse, huh? Just like this past week, though. Okay, just this past week has been, I think, Trump effect. But today, I don't know if I can say what's really driving really any of this. Granted, we're kind of talking about a small little bit here, but I thought that this was like a mean reversion trade. I thought that this was like the high time frame momentum funds were doing mean reversion because we just barely touched that 200-day moving average. So maybe they're making the play that it comes back to the moving average, which is at 25 or so. Well, they came short of that. And now they're pushing on the bottom side. So then we're just like, well, what was happening when they sold? Central bank speakers. So, like, did central bank speakers just ruin the trade and now there's nothing there for it? I don't know. It's just kind of, it was, I don't know. Part of me is like, feels dumb. Like, I could have played this so much better and everything else. But then part of me is like, oh, actually, I'm glad that I was in there and I held it and was like along for the ride, because it was kind of an odd ride. And I might have had a tendency to just completely dismiss the whole thing as noise if I hadn't have traded it or just not paid attention and seen it, right? So yeah, I could have taken profits when I realized I should. It's not even that, because I would have only taken 2 contracts out, right? So I think that either way, I was likely to do something that I regretted. No, the one that I really regret though was like, I was sitting there like, like, I feel like the reason that I got in this isn't really valid anymore, and I don't know. I was doubting myself. Why didn't I just scratch it, right? But then I've kind of been saying, well, this is just for fun. I'm kind of like degenerate risk taking here. I don't know. I don't think I'm a very good degenerate risk taker, guys. Kind of seems to me that if I'm going to be a degenerate risk taker, that when I get a move like that, I got to just take it. Not much sticks out, obviously, except for the notes on the Denali's where they say if they were in the wrong, they'll pay $20. Maybe a small bit of acceptance of themselves haven't done wrong. Sorry, I missed the first part of your comment. I kind of skipped over it because I was like, okay, that's a different subject. We'll come to that one when I'm done with this part. You know how we keep talking about prop firms being shady, changing rules constantly, etc. Well, Apex Trader has updated their rules and payouts again now and calling it Apex 3.0. Not much sticks out, obviously, except for the notes on denials where they say if they were in the wrong, they will pay $20. Maybe a small bit of acceptance for themselves having done wrong. Oh, I don't know. Like the whole thing is that the prop firms are set up for you to fail. They are giving you like targets and everything that are basically destined for you to fail, and they don't want to pay out. So it really seems to me that the combines have like an explicit incentive for you to fail. Like I can't put it any other way than that. You know, so here's a challenge that I would put out to the industry, because there's going to be all sorts of people that are like, no, we don't want people to fail. We want traders to be successful. That's why we went into this. Okay, then fund a swing trader. Make a combine where you're allowed to hold overnight, and you're allowed to hold positions in multiple instruments at the same time, and like you've got some real like real margin to work with, you know, with the intent of allowing people to trade momentum, like swing trade momentum, because that's a strategy that we know works, right? But I don't think that they would do that, because then they would actually have to like do payouts. They banned a bunch of strats with the excuse that they are trying to shut down dudes running shady multi-account strats, and now they're back. Well, yes, but that is what people were doing. It's okay. So let me explain this. Oh, I should put this in the video. This is the piece that I'm missing, I think. Okay, no, let me explain. Okay, so if we come in here and what was it that I said? Let's just you know, use general numbers. There's a 1 in 3% chance that you will pass the combine. So for just randomly, okay. Most combines also have like 2-step process. There's only 1 or 2 of them that allow you to go immediately to live. Okay. So it's actually more like a 1 in 9% chance that you pass. Okay. So that means that for every 1 person that passes, there are 8 other people that fail, and they're making their money from the 8 people that fail. Okay. Well, what if all 9 of these guys came in and said, I'm just going to start 2 combines. So now you have 18 combines, and 9 of them are only go long, and 9 of them are only go short. Okay. Now you have a 50% chance of passing, and a 50% chance of and you know, if those pass, chance of getting a payout, right? So now all of a sudden you have more people passing. It completely screws up their business strategy. That's why they're doing it. It's because if people are just doing duplicates, you know, like if you were actually making money from people going to the market and trading in the market, then you wouldn't care, right? And what I see a lot of these retail traders doing really is like literally they take on, they buy like 6 different combines and do something slightly different on all of them. There's a lot of people doing that. I mean, there are some people that are copy trading all of them to increase their leverage. That's another thing that happens, but anyways, the where I kind of turned on the funded trader programs, like the part when I went from like, you know, like there was a time where I was trying really hard, and then I kind of shifted to, well, you know what, I think that these kinds of parameters are actually hurting me more than helping me, and I should be trading smaller, and that helped a lot, right? But I was still kind of like, yeah, you know, if you do the combine, like that's your thing. Where I started to just outright hate combines was when they started to push the resets so much. When they started to push the resets, that's when it was like clear, this really is a lottery, and it's intended to be a lottery. Like their business is essentially a lottery. People are going in hoping to get lucky. And there's not really a very good long-term edge in any of this. And the you know, as times goes on, they just seem to prove that out more and more. Because then they're like denying payouts to people, and all of the prominent traders that were getting funded and that were funneling people into these programs like lost their accounts because the strategy didn't actually work long term, and all of these sorts of things. It's just, it really is a bum deal. It's a solid business model, I guess. I think one of the other things that I kind of see though is that it seems like it's already saturated. Like they saw that it was like a good I don't want to call it a scam, but I don't know what kind of a derisive term I could use. Yeah, if retail bros are gonna YOLO, I might as well make money on it, right? But something that I see from the companies is that like there's a certain amount of money that it makes, and then like that's the limit. Like they can't get any more from it, because you can see them trying to like nickel and dime and really push the marketing and so forth. Like there's actually limited upside to it. There's very limited upside to it. Okay, well, they did kind of go for those session lows, and they've backed off of it, and it's still all kind of nonchalant and random looking to me. So I'm really tempted to just try and hold this until the pit session closed to see what happens. Yeah, and then they also take the piece of a pie from anyone who actually does do well. But you'll notice that most of the combines have things set up to where like you really have to do well to get funded, right? Like most of them are, well, here, let me pull up my list here again, and I'll show you. It's over here. If I can find it. Where did I save it? Oh, here it is. It's in the root directory. Okay. So these three, Tick Tick Trader, Molinox, and the Trading Pit, are all live, are only sim. They are sim only. So if you pass and all of that, like, you get payouts and everything, but you never actually go to live, right? Okay, let's skip this one. And this one. There's Perdia and Next Gen Futures Trader that you pass, and there might be a two-step evaluation. Next Gen Futures Trader is the only one where you go after the evaluation, you go straight to live. Okay. Perdia, two-step evaluation. Okay, and then you get live, and you're getting payouts on live. Okay. And then Trade Day and Earn to Trade, you go straight to live after. So they're just like that as well, but you can choose to just get sim payouts, which is kind of okay. So why would you not want to go live? Anyways, but all of these other ones in here, Funded Trader, Apex, My Funded Futures, Up Profit, Elite Trader Funding, Fast Track Trading, they all are basically at the discretion of the firm. So basically, they get you in there, and then if you're like getting huge payouts, then they say, okay, you should be going to live. Right? Because then they're not paying for it. But otherwise, in all of the other situations, the firm is basically saying that, like, it costs us less to pay you the earnings out of our own profits than it is to set you up on a live account. That's what it means. Otherwise, why wouldn't they just put you on the live account? Well, it's because there's like costs associated with going on the live account. One of the reasons, like, one of the things that you might ask is, well, why is there like these ones where you can go to live funding, but it also offers sim payouts? Why is that? Well, because in order to, once you get one of these ones, like if you do Next Gen Futures Trader, you pass the evaluation and now you're on to live trading, right? In order to trade, you have to pay the professional fee, which is like $50 a month or something. Some people don't want to pay that. So, yeah. The whole thing is that if you're a professional, like, shouldn't the $50 a month fee, like, be no big deal? I just can't help but smile, because when you look at the rules and everything else, the inescapable conclusion is that this is all set up for you to fail, and that they really are just making money on people failing evaluations. And again, if it's not about that, then make us a combine where the rules are something where like known profitable strategies work well with it, like momentum. Give me the money to run a momentum strategy and allow me to hold overnight, and we'll run a momentum strategy and see what we can do with it. Yeah, the casino is set up for the house to always win, but millions will still flock in. Yeah, and like, I don't know. The thing is with gambling is like, so if I go to Vegas and play slots, for instance, I can remember one or two times with friends going and you put like $1 in. Literally to just put $1 in, and then you'd win like $20, and then that would pay for dinner. And we were able to do that pretty consistently, in fact. And then if you didn't, then like you were just done for the night, right? At only risking like a very, very small amount. And it was totally worth it, because like they have all of these crazy electronic games and everything. with cool animations and sounds and all. Like, it is entertaining, right? Well, is futures trading entertaining? I don't know, man. I think, like, I do enjoy it, but when money's on the line, I find the stress outweighs the entertainment value for it, you know? I don't like the stress. Like, I would really like right now, I tell you what, to come in and take some risks, have some big trades, do some of the degenerate things that I see other creators do and all of that. Just because I'm looking for anything that can help me right now, and I'm in between jobs and everything, right? But while I'm between jobs and interviewing and things, the last thing that I need is that extra stress. That extra stress just pulling your body down, you know? I've been doing an okay job with it so far, I think. But, you know, that can quickly spiral out of control, and then that can, like, prevent you from being able to effectively get another job, and it can cause stress with your family and all, you know? It's not worth it. So I only want to take the risk when, like, everything's really stable and I really have the ability to take on the risk. But then another part of me says, no, don't even, just wait until you can do the swing strategy. That's kind of the way that I'm feeling right now. Because we've definitely had periods where we understood the markets and, you know, we're on, and it was just like the hit rate is 100%, right? But for some reason, haven't been able to get into that groove for very long, in a long time. The market has just been very different and not as, what's the word? Cooperative. Just hasn't cooperated with me as much, and I just kind of makes me, like, not want to take risks at all. I've become too risk adverse now. Beaten up too many times to become too risk adverse. But clearly I can still cling on to it, right? This is like when I get the hyper focus, it just makes me want to hold the contract. When really, when I just want to hold the contract, I should stop paying attention completely. Well, they did get back to 15. I'll see if they can scratch it at 16. But it's about time for me to get going. I have some good videos. Like the thing is on the stream with you guys, I think we got good content. I think we have good discussions. I might get in too much into politics or some other subject, so it might not be stuff that people are always interested in. But I do think that we're providing some real value to people. On the videos, I think we're providing some real value to people on, you know, this is things that we talk about on the stream and just kind of turning them into videos. But I think I'm giving you some real proven edges in there. Whether you can use that to make money as a retail trader, a different question. But I still think I'm providing real value there. But when it comes to my own trading, I still kind of feel like, as of late, what am I doing? This is just too inconsistent. It's not worth it. It makes me want to not do it. It makes me want to be like, let's just spend all that time and make an independent video game or something like that. Maybe I should give that a try. You know, if it was that time of year, like if it was summer, then maybe I would do that. Just make a Unreal Engine game. Some games that I've always wanted to try out to make. Anyways, that's probably depressing sounding hearing me listen to it. The thing is I'm like, I just don't want to give it up. I just enjoy the market too much. and I want to just keep trying and like, okay, so it's just, first of all, it's one day. Actually, the larger kind of risk-taking strategies have been doing pretty okay, actually. So I'm probably down on myself a little bit too much. And, you know, I can just wait until the market is really favorable and I really got something, and I'm willing to wait because I enjoy doing this and I enjoy talking to you guys. So there's really no reason to get down on myself. It's just, we're talking about combines, and it just bothers me, these people going out and really taking risks, thinking that they're going to become, you know, millionaires from day trading, and it's just not going to happen, you know? And I just don't want anybody watching my stream to get the impression that that's what they should be doing, or that I'm promoting that. In 2 weeks, markets may be more active. Well, but I would say that markets were fairly active today. They were definitely active yesterday. Today, it wasn't an issue of the market being not active. It was an issue of the market just being hard for me to predict, at least, right? Anyways, I'm yapping too much. I'm gonna get going. I will see you guys tomorrow. Stay excellent.